Okay, so you're right. High volume nodes are it's a range of prices which comes from a point of control or a consolidation, where a lot of volume has changed hands, and they do act as areas where the way I look at high volume nodes is they're pretty good targets. I know that somebody is likely to defend a position in that area. They're areas of chop. The market kind of moves from extremes back towards high volume nodes generally. I'm trying to look at that. Oil has an example of this. And so I know that as we approach an HVN, if I have a setup that would have me moving into an HVN, then I might pass on that setup. I might not take that setup because I really don't want to be trading into an area of chop. I'm shopping for a car for my son who's 19. He went to college, and I got to tell you, like, I'm applying auction principles in my negotiation. I was just negotiating this morning with a dealer on a used Mazda from like 2016. And I'm looking at all the sales, and this Mazda is right in the middle of the histogram, its price. And I'm trying to get him to the low value, which would save me like $2,000. And I know that's acceptable to him, but he's fighting to go the other way. He wants it on the high value area. But I know that he probably can get a lot of customers to take this car at that high volume node for that particular car. The same year, same mileage, and so on, brand and all that. And so I know that the best I can do is get him to the low volume node. I know that he will accept the HVN. That's where the market's fair value is. I know that he would love to sell me a lot of cars at the low volume node on the other side, or the value area on the other side, But if I'm looking for a deal, and remember, we make money, so I'm buying this car for my son to use it. But if I was a dealer, me buying it at the HVN isn't an edge. It's not giving me anything because the market's accepting that price. So if I buy it for that price, the best I can do is sell it back at that price and make no money and waste my time and effort. I want to be at the low volume node. I want to be on the extremes, trading back into the middle. But if we're sitting in the middle, there is no real edge, and it's likely that both buyers and sellers are in accord of that price. That's where your supply-demand curves meet. That's the intersection of supply, demand, and classical, economics, one-on-one economics of how do you set a price? You try to find where supply and demand meet and execute a trade. So that's how you want to look at them.